Right now, millions of Americans 65 and older are preparing to file their 2025 tax returns. The IRS estimates a massive portion will overpay simply because they do not know to ask for a specific piece of paperwork. By the time you finish watching this video, you will know exactly how to claim a newly created $6,000 tax deduction, including the exact lines to fill out on your forms. This deduction was signed into federal law on July 4, 2025, under the One Big Beautiful Bill Act. The IRS published the official guidance for it on February 27, 2026. This is a permanent addition to the federal tax code through 2028. It guarantees that qualifying seniors can shield up to $6,000 of their income from federal taxes this season. To access this deduction, the IRS requires you to meet 4 strict criteria. First, you must have turned 65 years old on or before December 31, 2025. Second, you must have a valid Social Security number printed on your return. Third is your filing status. The IRS approves this deduction if you file as single, head of household, a surviving spouse, or married filing jointly. There is one strict exception. If you are married but choose the status married filing separately, federal law bars both you and your spouse from claiming this money. You must file jointly. Meeting these initial rules makes you eligible. To determine how much of that $6,000 you keep, we look at your income bracket. The IRS uses a number called your Modified Adjusted Gross Income, or MAGI, to calculate your deduction. For most people, your MAGI matches the total income printed on line 11 of your tax return. This chart shows the maximum income allowed to keep the entire deduction. Single filers get the full $6,000 if their MAGI is $75,000 or less. For joint filers, the limit is $150,000. If you earn above those limits, a phase-out penalty activates. For every single dollar your income goes over the threshold, your deduction drops by exactly 6 cents. Let's do the math for a hypothetical single filer named Dorothy. Dorothy has a MAGI of $80,000. That puts her exactly $5,000 over the limit. We multiply that $5,000 by 6 cents, which equals a reduction of $300. We subtract that $300 from the maximum $6,000. Dorothy claims a final deduction of $5,700. Income limits require careful attention. A large IRA withdrawal or Roth conversion can suddenly push your MAGI past the threshold and eliminate your deduction entirely. Calculating your exact phase-out amount ensures the IRS accepts your return on the first try, securing your maximum legal savings. To claim the money, you need the newly created IRS Schedule 1A. We are looking specifically at Part V, labeled Enhanced Deduction for Seniors. Part V asks for 3 pieces of information. You will enter your verified birth date, the MAGI you just calculated, and the final deduction amount. You then take that final number from Schedule 1A and write it directly onto Form 1040, line 13B, labeled Additional Deductions. This is the step that actually lowers your taxable income. A common error is assuming this replaces the older existing standard deduction for seniors. It does not. The IRS allows you to claim both deductions at the exact same time. Flawless execution on these specific lines is what turns a theoretical tax law into actual retained wealth. This chart shows the combined value. A qualifying single senior gets the $15,750 standard deduction, the $2,000 senior add-on, and the new $6,000 deduction. That equals $23,750 in tax-free income before owing a single dollar. Your next step is to pull your tax return from last year and check line 11. That will give you a close estimate of your MAGI, so you can see where you stand for the April 15, 2026 deadline. In our next video, we will cover how to integrate this specific senior deduction with broader tax strategies for your Social Security income. The IRS published this publicly, but most people will never see it. Sending this video to a parent or a friend could save them thousands of dollars this filing season. Finally, this video is for educational purposes. For your specific situation, always consult a qualified tax professional.